So in this sum, we have to calculate the following ratios. Required, calculate the following ratios. Clearly showing the figures used in the calculation, we have to calculate current ratio, quick ratio, inventory turnover in days, accounts receivable collection period in days, accounts payable payment period in days, and gross, I think it is profit only, profit percentage, net profit percentage, ROCE, and asset turnover. Okay, so let's see what are the ratios that we don't have. So these are the ratios that we have to compute. So we'll start. So gross profit is directly given and sales is also directly given. So computing this ratio is not a problem. And it's a percentage. We'll compute net profit ratio. So net profit is, see, there's only one profit here, and this can either be a net profit or operating profit. So we don't know exactly what it could be. So we will compute it. But as the question is asking operating profit, we don't have any other data. So we can use this itself as the net profit. So the next one to find out is ROC is there. So ROC we'll find it out. So ROCE, we know what is the operating profit. Okay, so we'll take this as operating profit as well as a net profit because there is no other data clearly given. So we just have to find out the capital employed. So capital employed would be total assets, which is here 43,000, minus the current liabilities. So current liability is 24,000. So we can get the capital employed. So capital employed is 19,000. So this is a percentage number. So the next one to compute is current ratio and quick ratio. So we'll start with that. So for current ratio, we need the current assets. So current assets are these three numbers. So we can start from here. So current assets would be 14,000 plus 16,000 plus 500 divided by the current liabilities, which is 24,000. So when we solve, we'll get an answer is to 1. And quick ratio, we can copy the earlier formula. The only thing that will not come in the quick ratio is the inventory. So inventory value is 14,000. We can remove that. Apart from that, the ratio is going to be same. So we'll move on to the next ratios. So the next ratio is activity ratios. So we'll find out these numbers. So the cost of goods sold we have to find out, but that is actually and directly given. So if you take cost of goods sold is 42,000 divided by average inventory. Inventory is 14,000. Solve this, you'll get the answer. The answer that you'll get is in times. So the next is divided by 365 days. You will get 121. So we'll move on to the next one, receivable turnover ratio. So we have to get the sales. Credit sales is not available in this question. If credit sales is not available in the question, okay, you, as we said in the earlier videos, you can assume all the sales to be credit sales. So it's going to be 60,000 divided by the debtors. Debtors value is 16,000. So here we can take 365 divided by 3.75 and we'll get the day's answer. So we'll go to the next one. So for credit purchase, we have to get either the for a payables turnover ratio, we have to get the credit purchase. If it's not available, you can get the COGS. So COGS is 42,000 divided by the creditors. Creditors we can assume, as there's no other creditors, we can assume the entire current liabilities to be the creditors. Okay, we can assume it to be the creditors. So we can solve it. So we got the numbers. So the last ratio that we have is asset turnover. So for asset turnover, we need the sales. Sales is 60,000 divided by total assets. So total asset is 43,000. So the answer will be in times. So if you want, we can also find out another ratio called as net asset turnover ratio, which is equal to sales divided by net assets. So net asset refers to total asset minus current liability So we'll check the answers here. So the answers are quick ratio is 1.27, so that's available. Sorry, current ratio is 1.27, quick ratio is 0.875, inventory days is 122, that's correct. Receivables collection is 97 days, that's correct. Accounts payable payment period, that is 209 days, that also is correct. Gross profit is 30%. Net profit is 4.2%, ROC is 13.6%, and asset turnover is 3.2. See the asset turnover, they have to specify which asset turnover they want, whether it is like total asset turnover ratio or net asset turnover ratio. Okay, because we, unless they specify it perfectly, we cannot give a right answer. Okay, so that's about this sum.